cases have had some of the best returns of all asset classes over the last 10 years, beating Bitcoin, the S&P 500, and even Warren Buffett. But there has always been one issue: liquidity. Simply put, if you invested enough money, you wouldn't be able to sell that position without crashing the market. If you invested $1,000 into weapon cases 10 years ago, you would now have made over $2.4 million. But it would have taken you 120 days to sell that position. And that's assuming that no one else is trying to sell too. Let's examine the forces acting on the CS2 market and then make some predictions about how it might evolve in the future. Liquidity is important because it means you can sell items faster, but also because bid-ask spreads and inherent transaction fee are reduced. Let me explain. Take the Bravo case, for example. This is the Steam order book, simply a tally of buyers and sellers at the respective prices they are willing to transact at. The gap between the most expensive buy order and the cheapest sell order is the bid-ask spread. In this case, the cheapest seller has to reduce the price by 9% to make a sale. Now, let's compare this to a more liquid case like the Dreams and Nightmares case. The bid-ask spread here is much smaller, with the seller having to drop the price by only 0.7% to get a sale. The larger this gap, the harder it is to sell items. Historically, liquidity has been quite low for CS2 items, limiting the maximum investment size that you can make. Two-sided marketplaces that have buyers and sellers exhibit winner-takes-most dynamics, where the leading player takes the lion's share of revenue and profit, but also liquidity. Take the social media market, for example. If we plot the percentage of all revenue that goes to the companies within it, Meta has 93% of the revenue of all social media companies. This is because Meta has the most users and hence the most advertisers. This same dynamic also applies to Uber and riders and drivers, and eBay with buyers and sellers. So, has CS2 got a winning marketplace yet? Well, it depends on how you look at it. This is the website visits for each of CS2's main skins marketplaces. Steam is clearly the big winner here, which isn't surprising to most players, given it's the fastest website to sell skins on. But what about websites that let you buy and sell for cash? While there isn't a clear winner yet, CS Float has the most visits, which aligns with the community's sentiment of good liquidity and low fees. Given there isn't a clear winner yet, we wouldn't expect to see a clear correlation between users and total sales fees, including the bid-ask spread. We can investigate this further by plotting the total effective fee as a percentage of Steam list price against website visits. We see that the more traffic a website has, the higher the total sales fee. The most commonly used websites by the community, Skinport, Buff163, and CS Float, have some of the highest total effective fees if we include the price level difference between the Steam community market and prices on those websites. This is a very surprising result indeed. Some of the factors behind it might include: first, third-party marketplaces are demand limited, meaning there are more people looking to sell skins for real money than there are looking to buy them. 2, sites with higher traffic might raise fees given their dominant position. 3, there might be a mix effect with more motivated sellers using the larger marketplaces, but also being more likely to discount when they sell. And lastly, if implied fees decrease with marketplace size, arbitrage would close the gap. So we might naturally expect this result when items can easily be bought and sold between different marketplaces, which isn't possible with the likes of Meta, eBay, or Uber. While only time will tell if it actually happens, if sales fees continue to decrease with a more dominant position, we can be sure of 3 things. Firstly, selling with cash will become easier as there are more buyers and sellers pushing liquidity up. Secondly, selling for cash will become cheaper as bid-ask spreads are reduced. Thirdly, in the light of a consolidated market, one winner will take most of the profits, which it can reinvest into the business to provide CS2 players with a better platform experience. So how does all this talk of liquidity relate to the maximum position size that we can make in our CS2 investments? We can plot the daily sales volume of the CSGO Weapon Case 1 as a proxy for CS2's marketplace liquidity. The liquidity of this item has increased at 41% annually, which is actually faster than CS2's rate of player growth over the same time, which was 34%. This sets a very strong set of fundamentals for liquidity growth over time, with CS2 attracting more players to the game, which are increasingly engaged with the economy and buying and selling skins. If current trends continue, the CS2 marketplace may have enough liquidity to support investments of $50,000 or more. But if you still need even more confidence to invest, click my next video where I explain why Valve has introduced Genesis terminals and how it's good for the CS2 economy.